Hello and welcome to another deep value video. Today taking an in-depth look at Nvidia Corporation, ticker symbol NVDA. We'll dive into financial metrics, assess the company's growth, and ultimately try to find its fair buy price. Nvidia Corporation is an American multinational corporation and technology company. It is a software and fabless company which designs and supplies graphic processing units, application programming interfaces for data science and high performance computing, as well as system on chip units for mobile computing and automotive market. NVIDIA is also a dominant supplier of artificial intelligence hardware and software. The stock is priced at $147 with a market cap of 3.44 trillion. Now let's dive in some key valuation metrics. The price to earnings ratio stands at 65.7 and the price to cash flow ratio is 70.6. The median PE over the past 10 years was 48.8. Over the past 5 years, the company's revenue has grown by 458% and its bottom line has nearly 10x. Um, in terms of earnings per share, there's been a growth of also 981%, so basically a 10x. Notably, the number of common shares outstanding is 24.9 billion, so basically the same as in the fiscal year 2020. Now let's assess the company's liquidity and solvency. The interest coverage ratio is 237, indicating the company's solid ability to handle its debt obligations. The quick ratio, a measure of the company's short-term liquidity, is 3.79, which is extremely good, one of the best I've ever seen. This suggests a very high ability to handle short-term liquidity shocks. Additionally, the long-term debt equity ratio is 0.15 and the total debt equity ratio is 0.15, both showing a very low debt load. Shifting to the cash flow statement, cash from operations is at 28 billion, reflecting a growth of 490%. Cash from investing activities is minus 10.6 billion with a minus 272% change, while financing activities are at minus 13.6 billion, showing a plus 1,621% change over the same period. CapEx has increased by 118.6%, and free cash flow has grown by 532.5% to 27 billion. Moving forward, let's look at the return metrics. The return on equity is 115.5%. The return on investment is 109.6%. The return on assets is 75.1%. Then the return on invested capital is an astounding 130.3%. This is extremely high. Of course, this is extremely good, but it's interesting. I don't think I've ever seen a company with such a high ROIC. But let's continue. Now let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 9%, a revenue growth rate of 20% for 5 years, and a perpetuity growth rate of 2%, we get a fair value of $78.69. Secondly, using a multiple valuation of 20 times earnings, operating cash flow, and 25 times free cash flow, we get a fair value of $57.95. Thirdly, the price target is $161, and putting it all together, we get an intrinsic value of $99.2. Using a 15% margin of safety, we get an acceptable buy price of $84.34, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I would rate Nvidia as a sell. Now, for those that are asking why, well, it's very hard to actually say what's going to happen for Nvidia because they're basically priced for perfection. I mean, yeah, they're growing a lot, but they're still overpriced for current earnings and they're overpriced for the earnings of 2025, 2026, and 2027. If they manage to reach those expectations in 2025, 2026, 2027, and so on, then sure, they could be a buy right now, but they're already overpriced. So if you are buying now, you're getting a lower return than if you had bought, I don't know, $100. I actually owned Nvidia once, so and I sold I think at 1,000 something. It was pre-split, about 100 and something right now. Um, yeah, I'm not sure if I don't know. It's really hard to rate Nvidia because you could make a lot of assumptions. This is filled with variables. For example, if you expect that they'll continue their growth rate after 2027, their high growth rate, then yes, they're a buy. If you believe that they will keep their huge operating cash flow margins and manage to increase them continuously, then yes, they are a buy. But these are a lot of variables, and you may never know what will happen in, I don't know, 2 or 3 or 4 years. with this AI bubble and with their main revenue segment. I personally don't really think AI as of now has really that much has shown that much practical potential. Of course, it can be used in some segments, but consumer generative AI hasn't really improved since GPT-4. I mean, GPT-01, I've used it. It's really the same thing. I don't see the difference. Until AI can actually do real things, can innovate in mathematics or things like that, this segment is just a bubble with no real applications. I heard about, I have a friend that works in bioengineering, and he showed me, he explained to me, I think it was called AlphaFold or something like that. It was very interesting, where they simulate molecules, if I understood correctly. Now that is a interesting application of artificial intelligence, um, but I'm not sure if their growth is sustainable because most of these GPUs that are being bought from Nvidia are bought by a few customers, which are Microsoft, Google, Meta, and they just use them for generative AI, for things like, I don't know, ChatGPT, Copilot, and so on. And this, I'm not sure if these projects will ever uh, manage to sustain this huge capexes. I mean, Google is spending, I think, if I remember correctly from my last DCF of Google, it was like 50 billion on capex and 50 billion on acquisition, so 100 billion if you include the acquisitions in capex. Now, if Nvidia's future is basically based on Google and Meta and Microsoft, if they continue their huge capexes, but I'm not sure if investors will allow that for too much time. And so that's why I'm not sure if this is a sell. I'm not sure if this is a hold. I'm not sure if this is a buy. If you believe that this will go on and AI will actually become hugely practical in mathematics in daily life, then yes, you can buy it. But I don't know. I'm not good at technology. I'm not that knowledgeable about the subject, so I would just rate them at a buy somewhere below 70, sub 70 levels to be safe. Thank you for watching. If you found this video helpful, please like and subscribe for more deep analysis, and also check out my investing block featuring in-depth analysis from the link in the description below. See you in the next video. Bye.